Good afternoon, everybody, and thank you for joining us. I'm excited about this opportunity, and I hope that it proves useful and informative to all of you. I'm going to jump right in. We're chatting today about insurance mistakes, issues that could cost you a claim, and how to avoid them. I want to start with what I believe is the single most important thing that we need to remember. Uh, your insurance policy is a contract between yourself and your insurer, not your broker, not the underwriting manager, but between you and the insurer. In 23 odd years of short-term insurance, I am aware of exactly 2 clients who have taken the time to read through their entire policy schedule and wording and come back to me with queries that they had. One actually pointed out some spelling mistakes in the insurance company's policy wording. But as I say, it is a contract. It should be treated with the same diligence and like any other contract. If you have an employment contract, you're going to read it. If you're buying a vehicle and financing it, or you're applying for a bond, you're going to read the contract. It's critical that you do the same with your short-term insurance policy. That is the single most important thing that I'd like you all to take from this presentation. Jumping right in. Can I insure it? There are some provisos in terms of short-term insurance. The first thing is it needs to be yours. If it's lost, you need to be the person that's going to suffer a loss or a financial loss if something happens to an asset. So insurable interest means you need to have an interest in the item. You can insure your car, your building, your household contents, your cell phone, your laptop, your jewelry, and anything else. However, you can't insure your neighbor's car. If your kids still live with you and they are financially dependent on you, you can add their vehicles to your policy. But if they've fled the coop, living on their own or with their own families, they're working, they're independent, they need to have their own insurance on that vehicle because you have no insurable interest in that item any longer. That's very important. If it's yours, you can insure it. If it's your immediate families and they are part of your household, you can insure it. If it's not yours, they need to insure it themselves. The other thing that often is a contentious issue that you can't insure are maintenance-related issues, wear and tear, and gradual deterioration. We often see claims rejected because of a lack of maintenance. If you don't go and check your roof every year, make sure the gutters are clean and the downspouts are clear. Come a big storm, water collects in the gutters, it flows in under the roof tiles into your ceiling. You get those lovely yellow ceiling panels instead of the bright white that you wanted. That's a maintenance-related issue. The insurers will not cover it. Please make sure that all the maintenance is carried out. Wear and tear goes along with gradual deterioration. The insurers don't cover things like rusting, an item wears out. They don't cover tree roots getting in under your foundation and lifting the walls or pushing them over. Those are gradual processes or wear and tear. They're not covered. All forms part of maintenance. You need to make sure that everything's in good order and that you're not going to suffer any losses due to gradual processes, wear and tear, or maintenance-related issues. What happens when your stuff is stolen? Okay, this is important. First one is theft cover is almost always subject to visible, forcible, and violent entry. In other words, there needs to be a break-in. If it just disappears, chances are it's not covered. It's always worth asking the question of your insurers or your broker, but inevitably the insurers will ask for proof of visible, forcible and violent entry. A break-in of a burglary, an armed hold-up, of course, or similar situation counts as force. There is violence or the threat of violence, so that's covered. Your insurers will have certain security requirements at your home. Please read your policy wording and your policy schedule carefully and make sure that you comply. If they want burglar bars on all the opening windows, please make sure you have burglar bars on all the opening windows. If they need security gates or additional pin type locks on sliding doors, please make sure you have them. Most insurance policies will include a clause that states they will not cover any losses if entry is gained through an unprotected window or door or sliding door. You will find your policy also probably includes a locked safe warranty. We often don't insure all our jewelry or specify it under all risks, but there's a clause in your policy that states valuables and jewelry over a certain value must be kept in a locked safe when not being worn. Many times we've had claims for rings, watches that have lost or just disappeared. And because they weren't in a locked safe, the insurers will apply a maximum amount to that claim. The value of items that have to be kept in a locked safe varies from insurer to insurer. Some will be as low as 2.5 or 5,000 Rand. Others may be as high as 25 or 50,000 Rand. Please check your policy wording. Ask your broker or your insurer if you're not sure, and make sure that items that fall within that category where a locked safe is required when they're not being worn are in fact kept in such a locked safe. Adding to that, that lock safe needs to be secured in your house. It needs to be bolted to the floor or the wall. You can't just take a loose safe, pop it in the wardrobe somewhere. Okay, it has to be secured. You also should have valuation certificates for jewelry items. Once again, the requirements will vary from insurer to insurer. Some as low as 5,000 Rand, some as high as 50,000 Rand. Items above that specified value must have a proof of purchase or a valuation certificate. And in the event of a claim, your insurers are going to ask for it. Valuation certificates should be redone at least every 2 years. We have had cases where we've been able to extrapolate a value from an older certificate, but strictly speaking, the insurers want a current, in other words, less than 24 months old valuation certificate for jewelry and other collectibles, valuables. The last item here that I want to touch on in terms of the stuff in your home is average. People tend to be underinsured. When we look at our house, we say, if I had to replace everything in my home, it would cost me 100, 200, 500, a million. Once we do the exercise of completing an inventory form, you might find that the value required is much higher. If you are underinsured, in other words, you've insured your household contents or your building for that matter for less than what it actually would cost to replace, the insurers are going to apply the condition of average to your claim and reduce any settlement by a similar amount. If you want to do the exercise, please reach out to your broker or to your insurers, ask them to give you an inventory form and complete that. It takes some time. It's a bit of a schlep, but it's a worthwhile exercise. Certain high net worth insurers do offer the service of sending out someone to do a valuation, and they will then adjust your policy accordingly. However, the folk that go out to do those valuations are not certified to provide valuations for things like jewelry and other collectibles, and you would still need to get valuation certificates for those. Let's move on to our cars, wheels. Your insurers, again, will have certain security requirements for your vehicle. It may well be they are happy with just the factory fitted immobilizer, but depending on the type and the model of vehicle, there will often be additional requirements. Insurers classify vehicles as standard, high risk, and very high risk. High risk vehicles tend to be things like Toyota Quantums, Toyota Etioses, Ford Rangers. Very high risk vehicles, Toyota Hiluxes and Fortuners, Land Cruisers, some Lexus models. Um, I'm afraid it sounds a bit like we're picking on Toyota, but it's a reality. Um, High risk vehicles will inevitably require a tracking device, and it must be a tracking device that is approved by your insurer. Ask them for a list if necessary, or tell them what you have, and they can confirm whether it's satisfactory or not. Very high risk vehicles, they'll be looking for dual tracking. Two tracking devices can be from the same tracking company. Many systems include a tracking device and a backup device, or from different tracking companies. Please make sure you comply in the event of a theft or hijacking. If you don't, your claim may well be rejected. Another thing to keep in mind is if your vehicle is stolen, you may have a limited time period in which to report that to your insurers or your tracking company. I know of one claim in particular where a vehicle was stolen while the chap that owned it was out to dinner. They came out, the vehicle was missing. Unfortunately, in his circumstances, his wife was ill. He had to get her home. And once that was all done, he had exceeded the 6-hour time limit that his insurers required him, within which his insurers required him to report his vehicle as stolen, both to the SAPS and to his tracking company. And that claim was also rejected. So make sure you understand the terms and conditions of your insurance security requirements, and please comply with them. Many insurers now, Momentum, for example, and Discovery, have smartphone enabled apps. Not only are they able to monitor your driving habits. I've never seen a claim declined because of bad driving habits, but they can also use crowd search functions to find your vehicle in the event of it being stolen or hijacked. Another important thing to remember about your motor vehicle insurance is the use that you have specified for it on your policy. You can have domestic or private use only, which is literally that. Running down to the corner cafe, driving around, anything for private use. Then you can include commuting to and from work, and this can be a little bit of a gray area. If you work at multiple locations, either locations belonging to your business or various other customers and clients' locations, you may need to insure your vehicle for business use. Anything that involves you traveling away from your normal place of work to other offices or to clients and customers, your vehicle should be insured for business use. Please keep that in mind and make sure that you have specified the correct use to your client. Many years ago, we dealt with a case for a client of ours. We weren't the insurer or the broker in this case, but when he took out a policy, he had mentioned to them, and we heard it on the voice logs of the call, that he used the vehicle for mostly private purposes. He was involved in an accident, and at the time he'd been using it for business use, and the insurer rejected the claim because they had covered him for private use. Please double check and triple check to make sure that the use of your vehicle is specified correctly on your policy. If you're not sure, ask your broker, ask your insurer, ask us, and we'll be able to clarify that for you very quickly. Who drives your vehicle? Is it yourself, a member of your family? Most insurers want to know who the most regular driver of a vehicle is. And I'm speaking here about personal policies. Commercial policies, business policies are a little different. Most of those are open driver policies. So anybody with a valid license and your permission can drive the vehicle. Some will still want to know who drives it most regularly. But in terms of personal policies, the most regular driver of the vehicle has to be noted. And if it is noted incorrectly, the insurers can reject a claim, or they may well decide to charge you additional premium, depending on what they would have charged had the person who actually drives the vehicle most often been noted on the policy. We had a case recently where a client's daughter had been driving the vehicle for a number of months. She'd moved out of the home, moved down to the Eastern Cape shortly after qualifying. She's doing her internship. She was involved in an accident, and her mom was still noted as the most regular driver of the vehicle. It took a lot of fighting with the insurers to get them to settle the claim, which they did eventually, thank goodness. But they did subtract the additional premium that they would have charged from the settlement amount. Please be honest with the insurers. If you try and wiggle your way out of it, they will catch you. The question that was asked of the daughter who'd been driving the car at the time of the accident in this case was, who puts petrol in the car? Obviously, she answered honestly. She said she does. And the insurers, using that information and other details, they had determined that she was, in fact, the most regular driver of the vehicle and not the mom, as was stated on the policy. Let's look at our driver's licenses. Make sure that you have the correct category license for the vehicle you're driving. Most of us, those of us of more advancing years, will probably have a code EB license, the old code 8. People who got their licenses in the late 90s and onwards will generally have a code B license, unless they specifically went to get a code EB license. Any license with the letter E in front of it means you can tow a trailer that weighs more than 750 kilograms. If you do not have an E in front of your license, the maximum weight you can tow is 750 kilograms. Be it a normal light motor vehicle, sedan, double cab, bucky, regardless of what the vehicle is allowed to tow, your license doesn't allow you to tow more than 750 kilograms. If you have a code C license that allows you to drive a heavy commercial vehicle, that E restriction still applies. If you are driving a truck and pulling a trailer, if that trailer weighs more than 750 kilograms and you have a C or a C1 license, you are driving illegally. It must have the E in front of it, otherwise you may not do so. Something that comes up occasionally are foreign driver's licenses. We need to keep in mind that if a foreign driver's license is not in English, the insurers require that you have an English translation of that license. And for any foreign driver's license, they're going to want confirmation from the country of issue that that license is valid, has not been withdrawn or suspended. After the fact, these can be difficult to obtain. For example, one used to be able to go to the Mozambican embassy in South Africa to get a letter confirming that a Mozambican license is valid. You can no longer do that. You need to take a trip to Maputo to do so, and that can be an additional expense and time delay in the event of a claim. Something else to remember is that anybody who does not have a SADC license, in other words, South Africa and our neighboring countries, members of SADC, may not drive a vehicle that requires a professional driver's permit, a PDP or a PRDP. If you're driving such a vehicle, your license must be from one of the SADC countries or a South African license. In addition to that, if you are a permanent resident in South Africa or you have a work permit for South Africa, you need to transfer your foreign driver's license to a South African license within a period of 60 months. unless, and failing that, it becomes invalid. Keep that in mind, especially if you are employing drivers with foreign driver's licenses. Permanent residents and people with work permits have to transfer their licenses to South African licenses within the time period. It used to be 12 months. They've updated it to 60 months, but it's still important. An invalid driver's license will result in a rejected claim. If you are of advancing years, and it varies from insurer to insurer, people over 65 or 70, 75, 85 in one case that I'm aware of, must have a letter from their doctor stating that they are fit to drive. I had the unfortunate occasion to have a chat with a close relative recently and say to him, look, I'm afraid you're not allowed to drive anymore. It's a very difficult conversation to have, but the doctor had said absolutely not, under no circumstances may they drive. And we had to communicate this to them when the insurers asked for that letter confirming that they're fit to drive. If you are 65 or older, please check with your insurer or your broker and find out whether you need that letter. It would be prudent to have it up front and on file before an incident happens. Something else that comes up often is the stuff in my car. Many years ago, every vehicle that was stolen had a leather jacket and Ray-Bans in it, and people would claim for those. The stuff in your car is not automatically covered. Even if it's insured under your household contents, when it's not in your home, it needs to be specified under the all risk section of a policy. If it's insured under the all risk section, then the cover is generally worldwide. It's covered anywhere that you might find yourself with it in the world. If it's not specified, then your claim may well be rejected. You won't have a claim for your laptop, your tablet, your sunglasses, your leather jacket, and anything else that might be in your vehicle when it's stolen. Adding to this, it's a condition of most policies that any item in an unattended vehicle, in other words, there's nobody in your vehicle, it's parked and you're somewhere away, must be in a locked boot or a compartment. Putting your laptop under a jacket on the back seat does not qualify. If you do that, your laptop is stolen. The insurer is highly unlikely to pay your claim. You've got to keep it in the boot or in the back of a hatchback, but make sure the luggage cover is in place. Popping it under the seat is also unlikely to qualify as a locked boot or compartment. Please make sure that you put these items away correctly to make sure so that your claim will be honored, and rather take it with you than leave it in your car. Something that we're all aware of is remote jamming. All I can say is when you park your car and you lock it, please double check that the doors are securely locked. Insurers take a dim view of theft from vehicles. Remember, we spoke about visible, forcible, and violent entry. If there's no sign that your vehicle was broken into and something is stolen out of it, they are unlikely to cover your claim. Please make sure your car is locked. There are insurers that will accommodate remote jamming if you can prove it, which is difficult to say the least. Usually they'll require CCTV footage of you leaving your vehicle and locking it, and they want to be able to pick up that somebody remotely jammed the locking of your vehicle. Don't take the chance. Please double check that your vehicle is locked. That was your wheels. Now about my house. Common issues we come across when looking at claims for domestic buildings, your house, your outbuildings, and your household contents. The first is almost every insurer now has requirements in terms of surge protection. in the last few years, there has been a massive jump in the number of claims for power surge damage. Most insurers require a Type 2 SABS approved surge arrestor on your DB board. This will protect you from most power surges and lightning strikes, and make sure that you don't have to claim for expensive electronic equipment. Generally, we find that TVs, fridges, freezers, and network equipment are the most sensitive to power surges, and that's what we most often have claims for. One can buy these surge arrestor plugs that you pop into the socket and then plug your device into those. They are not nearly as effective as an SABS approved Type 2 surge arrestor on your DB board. And in any case, you would probably have to buy several of them, and the cost rapidly will approach that of putting a surge arrestor onto your DB board. The insurers will check that you do have the necessary surge protection in the event of a lightning or a power surge claim. In fact, this morning I had a look at a report for one of my clients who suffered lightning damage, and fortunately the assessors who had gone out and looked at the damage were quick to check and confirm that he did in fact have surge arrestors in place. You may well have a solar system or other alternative energy sources installed at your home. Your solar panels, your batteries, your inverters are generally not automatically included in your building insurance or your household contents insurance. They should be specified. Make your insurers aware of what is there. Make sure they have all the details. The size of the system, the capacity of the batteries, how many inverters, how many panels. And make sure that they have noted those correctly on the policy so that you're not disappointed in the event that something happens. Years ago, the theft of solar panels was almost unheard of. We had never had a case until probably 3 or 4 years ago, when suddenly they started stealing solar panels. I remember having a conversation with a friend of mine whose neighbor had just put up a whole lot. I said to him, we've never had a claim for stolen panels. And that very night, the neighbor's entire installation was taken. Took it off the roof and wandered down the road with it down to Alexander. So make sure that's specified correctly. Ask your insurers or your broker the question, what do I need to make sure that it's covered? Do you have a thatch house or a thatch larper, or even just a little thatch umbrella in your garden next to the pool? Please make sure that your insurers are aware of it. The requirements for cover on thatch buildings for both the building and the household contents are far more onerous than for standard construction. In other words, tiled roofs, iron roofs, IBR, and so on. Please make sure that your insurers are aware of the thatch on your property and comply with the requirements, which will probably include thatch safe or similar treatment every 3 to 5 years, depending on the requirements of the folk that apply it. Lightning conductors, if it's an extensive thatch roof, surge arrestors, the electrical cabling needs to be in non-conductive conduits anywhere that it passes through the thatch, and any chimney for a fireplace or a braai needs to be properly insulated from the thatch roof. Keep in mind that your insurers will need a certificate of compliance as well, not only for electrical installations, but also for solar electrical installations. Have a certificate of compliance on file, and in fact, send a copy to your broker so that they can keep it in case it's needed in the event of a claim. Sorry, excuse me. Gas installations must also have a certificate of compliance. And keep in mind that, in my experience, the requirements for gas installations seem to change all the time. They're constantly updating those regulations. Make sure that your system remains compliant and get a compliance certificate for it. Um, any change to any electrical system in your house or any gas installation, any solar installation requires an updated compliance certificate. If you don't do that, the system is no longer compliant. Subsidence and landslip is often an area where clients are disappointed when a claim is rejected. You suddenly find that the tiles on your floor are tenting, in other words, popping up like this, or tiles start falling off the walls, or cracks appear in the walls. That may be attributed to subsidence and landslip issues. In this case, generally because of the moisture content of clay type soils. As those soils contract or expand, due to the moisture content, it can cause your property, your buildings to move, foundations to shift. That is specifically excluded on most insurance policies. Subsidence and landslip cover will cover you for things like excavations due to mining, excavations and tunneling under your house that are not caused by mining activities are not covered. Also keep in mind that things like drains, watercourses, boundary walls, retaining walls, pools are not covered under your subsidence and landslip cover. It's not nearly as wide as it sounds. One can purchase extended landslip and subsidence cover on your policy, but it'll almost always be subject to a geological report, which is for your own account. The last time I needed a client to get one of those done, which was probably 10 years ago, it cost them in the region of 65,000 Rand to have a professional come out and do that report. So it is an expensive exercise. Again, keep an eye on your home, keep your maintenance up to date. If there are any issues that you notice start beginning to occur, notify your insurers, notify your broker, and let them look into it, establish whether it is something that is covered or not. And if not, attend to it before it gets worse. In fact, even if it's covered, always act as though you are uninsured and take care of things to prevent claims escalating. You should always try to prevent a claim or minimize a claim rather than abandon things to the insurance company. We recently had a case where there was a break-in in an unoccupied building. You need to note that most insurers will limit cover for unoccupied buildings if it is vacant for 30 days or more, 60 days or more, depending on the insurer. Things like malicious damage, loss of water, damage due to the bursting of water pipes or geysers are generally excluded if a building has been unoccupied for an extended time period. Notify your insurers if your building is going to be empty, and please make arrangements, if necessary, for someone to check on the property, someone to babysit the property, and keep it safe. That pretty much summarizes the extent of the things I'd like to draw your attention to. These are all issues that can lead to disappointment in the event of a claim. Be aware of them, and as I say, read your policy, understand the terms and conditions of it, understand your insurer's requirements, and make sure that you are able to comply with those. Many times things are negotiable. I have clients who do not want CCTV cameras in their home. They don't want burglar alarms. They don't want security gates. We've been able to negotiate with their insurers that their household contents will still be covered in the event of a burglary or a theft, but with an additional excess. So things are negotiable. If one insurer won't negotiate, another may. Chat to your broker and have a look at options and see what they can do for you. There's almost always a solution that will suit your requirements. Help is just a phone call away. My clients know my cell phone number and they know they can contact me at any time. But your insurer will have an emergency call center with an emergency contact number as well. If you're involved in an accident, you know what's going to happen. Suddenly, there are half a dozen tow trucks there, all clamoring for your business. They want to tow your car to their nearest yard, where it might end up racking up storage fees and could cost you a fortune. Always make sure that you contact your insurers directly and get authorization from them for one of their authorized tow trucks to tow your vehicle. Otherwise, you can incur significant expenses and the cover for towing will be limited by your insurers. The same goes for burst geysers. If you have a burst geyser, please don't call in your friendly local plumber, no matter how good the relationship with him is or her. Please contact your insurers and get them to send out someone that is on their panel of service providers and authorized to work for them. That way, all the costs other than any applicable excesses will be covered. We recently had a case where a client paid almost 25,000 Rand for the replacement of a standard geyser. The insurer's agreed limit on that particular job with their approved plumbers was around 14,000 Rand. It means the client ended up 10,000 Rand out of pocket because they hadn't followed the correct procedure. Have your policy number and your insurer's emergency contact number on your cell phone. Save them so that you know who to call in the event of a claim. If your vehicle is stolen or hijacked or written off in an accident, you need to get around. You can add car hire to your policy. The type of rental vehicle and the length of the rental period that your insurers will pay for will vary depending on what you select. But please check and make sure you have got car hire on your policy if you cannot do without a vehicle. At the same time, your insurers will have a roadside assistance service. Contact them in the event of an accident, in the event of an emergency. They will make sure that the approved tow trucks take your car to wherever it needs to go and will also assist in the event of a breakdown. If you're close enough to home, you can ask them to take your vehicle home or they will tow it to the nearest authorized repairer. The insurers, of course, won't cover the cost of the repairs in the event of a breakdown, but the towing cost is covered. When you finance a vehicle, I know this myself, you may end up owing the bank significantly more than the listed retail value of the vehicle, which is what the insurers will cover it at. No doubt your finance house will offer you credit shortfall, but it's worth approaching your insurers as well to find out what sort of premium they will charge you for credit shortfall cover. In the event of a total loss and you owe the bank more than the value of your vehicle, you might find yourself significantly out of pocket if you don't have credit shortfall or top-up cover on that vehicle. Most insurers will allow cover of anywhere between 50 and 300,000 Rand or more if necessary to cover that shortfall in the event of a total loss. You can cover wheels and tires. Generally, insurers do not cover tires, damage to tires and rims, unless there is other physical damage to the vehicle. There's a clause in your insurance policy that simply states that damage to wheels, rims, tires, and suspension components due to the unevenness of a road is not covered. But if there's other physical damage to your car, they will. You can, however, purchase wheel and tire cover, usually in increments of about 10,000 Rand, so 10, 20, 30, or even 50,000 Rand. If you have fancy magrams and horrifically expensive tires, check that out and see whether you need it. Remember that with most vehicles today, particularly all-wheel drive vehicles, if your tires are worn and one is damaged, you need to replace 2 or perhaps even all 4 of the tires to keep them the exact same size. Otherwise, it causes all kinds of issues with your traction control and so on. Your wheel and tire cover won't pay you for the tread you've used on a tire. So if your tire is worn down 50%, they will reimburse you 50% of the cost of a new tire, and the balance will be for your own pocket. And that is just about the end of it in terms of things that I'd like to bring to your attention. We deal with multiple insurers, most of which are listed here, and there are some others that have come on board as well. So we're not tied to any single insurer. We like to approach many insurers in the case of quotes being required, so that we can give a much broader perspective on the whole issue. Many insurers are niche insurers that only cover specific risks, but most are more general in their approach, and you can cover your house, your business, your vehicles, your all-risk items, and everything else. It's often more cost effective to consolidate your cover onto a single policy. Very few insurers are enthusiastic about motor-only policies. They don't like to just insure motor vehicles because those are generally the highest risk item on a policy, and they like to mitigate that risks by adding your household contents and your buildings to that policy. So as you see, we are able to offer a selection of quotes across the spectrum. We don't deal with any single insurer. We do, however, have our preferred service providers. Much of my business is placed with 3 or 4 specific insurers, simply because I've dealt with them for close to 20 years, or in some cases even longer than that. I know that their service is satisfactory. I know that their prices are reasonably good, and that my clients are going to get what they need in the event of a claim. You are most welcome to contact us. You can scan the little QR code on the slide, which will pop up again in a few minutes. If you'd like to get in touch, we would be more than happy to review your current cover and look at alternative quotes for you, or even just give you some advice in terms of what you have and what you don't have. My cell phone number is also there. Anybody's more than welcome to give me a call at any time. If you would like us to look at alternative quotes for you, there is quite a bit of information we need. The easiest way to get that process started is usually to send us a copy of your current policy schedule and your claims history, going back as far as possible. Most insurers require a claims history of at least 3 years, if not 5, but the more information we can give them, the better. And we're standing by. We'd love to help. Our purpose is multiple. We have I'm trying to put this into the right words. We like to look at our clients from a holistic point of view. Our purpose is to empower people around the world to achieve financial freedom so they can choose what's important to them. Therefore, we offer wealth, health, short-term and employee benefits services to all of our clients, and you are most welcome to contact us if you have needs in any of those areas or all of them. It certainly helps when we can get a holistic picture of your financial situation, and I know that I have a great number of colleagues here who are looking forward to having a chat with you to see how we can be of benefit to you and how you can achieve that financial freedom that's important. Thank you very much for your time. I appreciate it. Do we have anybody with any specific questions? I'd like to keep the questions reasonably general. But if you do have something specific or an issue you'd like to address, you're most welcome to contact me via that WhatsApp QR code or on my cell phone, and I'd be more than happy to assist.
Hi, Aaron. It's Mark here.
Thanks, Mark.
I do see there is a question in the chat. It says, is your alarm system and CCTV covered under the building cover, or should that be specified?
Mark, alarm systems, CCTV systems are generally considered fixtures, and so they would fall under the building insurance. On that note, something we often come across is people who are renting properties and install solar systems. Solar system falls under your building insurance. So if you are renting a property, you need to have a chat with your landlord and ask them to include it under their building insurance. The same applies to homeowners associations and body corporates. Solar systems are part of the building and should be insured as such. Your body corporate or your homeowners association should be able to increase your share in terms of your the additional value to your building and increase your levies accordingly to accommodate that.
Thanks for that, Aaron. I'd encourage, if anybody does have any questions of that nature, please do pop it in the chat. We can release it quite quickly. We've got about 10 minutes or so left of the session, so Aaron's on standby to answer any questions. We'll give it 2 or 3 minutes. In the event that there aren't any, then obviously, Aaron, you can probably close off the session. But yeah, let's hopefully get a couple of questions in for you.
Thank you. Yeah, if anybody has a question, you're most
You're just on mute, Aaron.
Sorry, I was asking Jamie to show me how to see the questions. I'm a little bit of a Luddite. David, I see your hands up.
David, you'll just need to put your question into the Q&A because we've disabled microphones on this call.
If anybody does have another question, please feel free to click on the little Q&A button at the top of your screen. As I say, I'm a bit of a Luddite. This is a new one to me. And you're most welcome to pop your question in there. We can try and address it. Otherwise, my cell phone number is on the screen, and you are, whoops, apologies. You're most welcome to contact me or use the WhatsApp link to get hold of us, and we can chat about it from there. All right. If there are no other questions, once again, use the link or give me a call at any time. I'm always standing by to assist. Would be more than happy to do so. No strings attached. We'd love to review your policy.
Aaron, there is one that's come through. It says, have you ever had to fight any of the insurers on behalf of your clients where they didn't strictly adhere to the I guess the insurer's requirements is what it means, yeah, but you ended up getting the claim approved?
We have done so many times. One of the advantages of using a broker is that generally they place a decent volume of business with an insurer that gives them a little bit more leverage, a little bit more clout when an issue does arise. We recently had a 100,000 Rand claim for the theft of solar panels paid out by the insurers, although strictly speaking, they didn't need to. So yes, we also had a case, you'll recall I mentioned insurable interest right at the beginning of the presentation, where a vehicle that belonged to a family member of a business owner was placed onto his business policy. We weren't aware that it was registered in somebody else's name, and he didn't realize he couldn't do that. The vehicle was a total loss, and we did eventually manage to get the insurers to settle that claim in full. And in fact, he ended up with a couple of £1,000 extra in his account once the finance had been paid off. So yes, it's something we do all day, every day. My colleague Mariska, who handles most of my claims, will be able to tell you that she spends a great deal of time negotiating, fighting, groveling, begging, whatever's necessary with the various insurers to get claims settled, even when the insurers legitimately reject those claims. So there is value in that. There's value in having somebody in your corner who can do whatever it takes to get you sorted out.
Thanks, Aaron. And then we have a question from Jane. In a couple married out of community of property, do both spouses' property get covered by one household policy?
Mark, there is automatically, or Jane, sorry, there's automatically insurable interest between spouses. So regardless of whether I or my wife own property, and regardless of whether we married in or out of community of property, we can insure those items on the same policy. Automatically, there's insurable interest, and so that is not an issue at all. When you start looking at tax issues or anything else, obviously it's a good idea to get some expert advice there, but from a short-term insurance perspective, it's not an issue. You can insure your stuff and your spouse's stuff on the same policy with no problems.
Thank you for that. And David, I know you had a question, but I don't know if you managed to type it into the chat at all. If not, I'm sure you could ask Aaron the question offline. It doesn't look like it though. Aaron, so I think that's it for questions. I don't know if you want to close us off. Thanks.
Again, thank you, everybody. Much appreciated. I appreciate your time and appreciate that you joined us this afternoon. Once again, please contact us if you have any questions or queries. We'd love to help. Thank you again and have a great afternoon.